Hi everyone, I think it's time I did a massive deep dive on crypto because I know there's a lot of confused people out there right now not knowing what's going on. Why is this cycle being different? Just not understanding what's going on. I'm hearing things like this is the worst bull market ever and, that the markets, no one knows what's going on. And once you understand how markets move, you actually understand that what's going on is exactly what should have happened, exactly what I predicted 4 years ago, which is why I exited all of my crypto back in November 2021, and why it's actually a really healthy and really good thing for crypto, and how it's actually in the long term extremely bullish if you can get through this final last chapter. You're moving into the capitulation phase right now. I'm going to explain where we are in the cycle right now. I'm going to explain where we are with Bitcoin right now, what key levels to look for in alts and Bitcoin, and then hopefully you'll understand what's been going on. Okay, so I'm going to take you back to a post that I did back in 2022. All right, so we're in the middle of the bear market there, talking about the fact that a thing that people don't understand is that Bitcoin's actually never been through a recessionary bear market before. So I'll just tell you what I mean by that. Okay, this is the NASDAQ. Bitcoin has only ever lived through that, which is up only in the stock market. It has never been through a recessionary bear market, ever. The worst bear market it's ever been through is the one in 2022, which is what it was going through in 2022, which was not good. Okay, so it's really important to know no one really knows how Bitcoin will go during that period. Okay, because we don't have any data to know that. That's exactly like saying here, when the NASDAQ was in 1999 before the tech bubble popped, that, man, the NASDAQ goes up only. Because it had never been through any other environment. It's up, 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 up. And you can imagine what people also thought during that period there, that yes, it was going to only go up, up, up. Okay, so that's the same with Bitcoin, is it's only ever existed in this period here. So it's never gone through that. So really important to understand that. What's also really important to understand is every time the NASDAQ crashes, Bitcoin crashes twice as much. Again, let me show you through data. Okay, on the top, I have the NASDAQ. On the bottom, I've got Bitcoin. So if you look, when the NASDAQ crashed nearly 37%, Bitcoin crashed 76, twice as bad. Okay, let's look at another time, the COVID drop. During the COVID drop, when NASDAQ dropped 30%, Bitcoin dropped 60%, twice as much. Okay, let's look at the 2018 bear market. When the NASDAQ dropped 22%, we dropped 82%. So can you see every time that the stock market, the NASDAQ crashes, Bitcoin crashes more. It's really leveraged NASDAQ. It has over 85% correlation with the NASDAQ. It has less than 10% correlation with gold. A lot of people say it's digital gold and it follows gold. It does not. It has less than 10% correlation with gold. I wrote about that for News Corp a couple of months ago, and I've been screaming that from the rooftops as well. It does not correlate with gold at all. I'm just pulling up here, why Bitcoin is not digital gold. So I wrote about it back in 7th of April, and let's pull it up and I'll show you what I'm talking about. So here, if you actually look, this is your global liquidity cycle. Okay, Bitcoin's been going up on expanding liquidity. We've actually had decrease in global liquidity as well. So we're in a different phase. But before that, let's go into here. If you look, when Bitcoin's been in a bull market, gold's been in a bear market. When Bitcoin's been in a bull market, gold's been in a bear market. When Bitcoin's been in a bull market, gold's been in a bear market. Okay, so now that gold's in a bull market, you've got to remember gold's a risk off asset. Bitcoin is a risk on asset. They're completely different things. They are not, oh, which one do you want, gold or Bitcoin? No, they're completely different. They have Bitcoin is if you want exposure to blockchain technology. It's a tech stock. Gold is if you want to protect your wealth. They are completely different things. I think Bitcoin may in time grow to being something like that once it has established itself and has a larger market cap. But people aren't going to store their wealth. Like, again, you've got to think like a billionaire. If you've got $1 billion, are you going to put $1 billion in a Bitcoin where you know it has had historic 50, 70, 80% crashes and you lose most of your wealth? No, you're already rich. You want to keep that rich. Will you put some of your wealth in it like you would put some of your wealth in a risk on asset to do what it's supposed to do? Maybe. Okay, but that's the way you need to think of it. Bitcoin is blockchain technology. Gold is gold, completely different things. And the data suggests that they do not run in sync at all. They run in sync actually with risk on assets, which you can see here. This is your others and Bitcoin. So as you can see here, when Bitcoin's in a bull market, so is the Russell. When Bitcoin's in a bear market, so is the Russell. So Russell 2000 is your risk on part of the market. So Bitcoin actually mirrors risk on assets. Another chart you want to look at as well is the NASDAQ to S&P 500. So showing the NASDAQ against the S&P 500 during that period. Again, you'll notice that Bitcoin has only ever been in a risk on environment where the NASDAQ growth stocks have been outperforming in value. When this turns, it's never been in that environment yet. Okay, this is the tech bubble, and we're back up at those same levels again. We've never been in a recessionary environment. So anyone saying, oh, it's a hedge, they have no idea. They're just going by what someone talked about on media. Again, you've got to follow the data and see, okay, well, let's see how it goes. And at the moment, the data actually says the opposite. It does not act as a hedge against a market crash or anything like that. It's actually leverage market crash. Okay, so if we, and when we do, which I'm expecting in 2026, get our bear market, we need to know how will it survive during that period. The scary thing right now is that the NASDAQ is only down a couple of percent and Bitcoin's already down 30% from that period. So there's is it a bit of a leading indicator? It can be. Again, if we go back to our chart, here, you can see that actually Bitcoin topped November 2021 and the NASDAQ topped kind of here 2021 of that one, but it didn't really start falling off until kind of January. And you can see by then Bitcoin was already down 30% by that period. So it's, again, a bit of a leading indicator. So it might be worth keeping an eye on something like the NASDAQ right now. Another chart I like to look at as well, and something that I pointed out to MTM students only recently, was our Australian XIJ index, our technology index, is also that leading indicator as well. So let me show you that one. So this was on the 31st of the 10th, which was, about 20 days ago now, but I just want to show you what I was seeing at the time and how it's really important to watch this one. What I want to point out is XIJ is being a bit of a canary in the coal mine previously, in the fact that if you look at what it's done, where it is now, so bullish move last time, and then you'll see here, we had this move up, that trap, and that change of market structure back through on bearish divergence, getting the exact same thing happen right now. That come down, quick recovery, took out the high, grabbed the shorts, and then change of market structure back through again on bearish divergence. So if this doesn't hold this zag zone, that will be actually catastrophic. That'll be really bad for the markets. It needs to hold this level here. If it doesn't hold that level, like it didn't hold the zag zone here, that would actually be really bad for the markets, and actually marking the end of that bullish move from 2022 on tech there. Okay, so, and if you look at the individual tech companies like WiseTech, Zero, Promedicus, things like that, they all have this exact same thing, bearish divergence on the last high. They're all showing some massive signs of weakness there. So just be careful on any growth, etc. Because they could be coming in for a bit of a correction there. Okay, you don't have to worry about if you're in the right sectors. All right, if you look at oil, utilities, commodities during the last 2020, they all went up during that period. Okay, so
Only if you're in the wrong sectors will you have to worry. If you're in the right sectors, they're fine.
Okay, so this is the thing that most crypto people don't do is they only look at crypto, which is a pond in the ocean. We look at all markets, and because all markets are interconnected, and what you'll realize is crypto is just like another sector, and it's that growth sector. It follows the XIJ. And again, I'll show you using data. Okay, so back in on very end of December, early January, I talked about the Nasdaq about to fall off a cliff in 2022. And on top of that, this is one of the charts that was a leading indicator that helped me understand that that was coming. Okay, so let me show you now. So come in here. Can you see back here? So we're on the daily. We're back in September 2021. See, we've come up, taken out that high. We've changed market structure here back in early December 2021. Came out, retested, and then we've started to fall off. Okay, so technology, XIJ went bearish early December, November. Okay, Bitcoin, same thing, 11th, and then once it broke down, this 14th of November here. Okay, that was how I was able to exit Bitcoin back at 64K and get out of all of my old coins back at the top. Okay, so this was on November 16, 2021, talking about have to be careful with regular correction, extremely low volume, bearish divergences. Everyone's really bullish, but this was the talking about that coming back down below, taking that 30K out down towards the 20K. Okay, that irregular flat that kind of no one's seeing coming. Again, it wasn't the only thing I saw. There was an abundance of info, but I'm just trying to show you how the tech follows and also can be a bit of a leading indicator there as well. Okay, so tech, and again, tech bottoms, we bottom, following tech, and again now, and you can see from that video, I had done that video there, and we have fallen off a cliff on tech, and we have not bought off that zag zone. And you can also see crypto is following it as well. Okay, so risk on assets are being taken off the market. They're selling risk on assets right now. So if you want to get a little bit of confluencer with Bitcoin, check out our XIJ, and you can typically find that, yeah, that's a risk on and it can follow there. All right, going back to what I was talking about initially with this one, that the bear market will be 3 times as long, knowing that it's never been this recession environment coming down, talking about the wave structure. So what I was talking about here was we've had our first halving cycle bull run, second bull run, third bull run. How markets work is that humans identify patterns in 3. No one knows something's coming the first time. Only the people that are in the know, that have been in the space, just are lucky that they're there from the get-go. The second time, some of the cluey ones go, hey, this happened last time, maybe it might happen again next time. And then the third time, everyone starts cluing, man, this happened twice, it's probably gonna, and that's when you get that euphoria. And then the fourth time, people recognize a pattern now, so then they go, man, it's gonna happen again. That's what's called the B-wave trap. Okay, so I did this post in 2022 saying we're in this bear market now. We're going to get a B-wave trap in 2023 because everyone's going to talk about the halving, and then we're going to get a longer bear market for 2024, 2025. Okay, so that's why I was saying it's going to be 3 times as long, because every other bear market, all we've done is correct one halving cycle, correct it, halving cycle, correct it, halving cycle. We weren't just correcting one halving cycle, we were correcting the whole cycle, which is why people are very confused. Well, I don't get it. Why is this halving cycle, this bear market been so bad? Because all you had was a B-wave trap. And again, I'll show you this using data as well. But before we do, I'll just go back to the post talking about the sentiment. Okay, so during that period there, wave B, 2020 bull market, next halving. Wave B is the second leg of the corrective structure and follows wave A. Wave B is considered a bull trap because it tends to draw in a lot of traders into believing the existing trend is still healthy. The halving cycle may get rich. However, this is far from the case. Wave B will be fairly short-lived affair and will often fail to surpass the wave 5 swing high. Many traders become trapped in their positions, which is exactly what's happened now on altcoins. That is to say that these traders will either enter new long positions or add to the existing long. Okay, then we move into 24-25 bear market. And where we are now, this is where people are starting to realize, oh, something's different this cycle. Let me show you how that thing has played out perfectly in the markets, and why people were looking at the wrong charts and how you could identify this for future times as well. Okay, so there's two charts with altcoins that you need to look at. The first one is your others dominance. So what you've got to remember is the minute you buy an altcoin, you are taking on more risk. When you're taking on more risk, you must be getting more reward. Okay, so for instance, in the stock market, you buy the S&P 500 or the Australian 200. If you're going to go and buy individual companies, it's because you believe it's going to give you better results than the S&P 500 or NASDAQ, or it's better than the benchmark. Okay, the benchmark in crypto is Bitcoin. So if you're going to venture out of Bitcoin that you know will be here in 10 years' time, otherwise the whole crypto space goes to zero, then you better get more rewards. So that's why in total, others, which is your altcoins, that the others dominance needs to be going up, because that means that they are outperforming Bitcoin, which means you want to be there. So if you look at the cycle now, what you'll notice is you had that wave one up to that first halving, you corrected that halving cycle. You then had that wave three, you corrected that halving cycle, and then you had that fifth wave. Okay, and then what you can see is happening right now is the ABC, exactly like I talked about. Okay, see that date there, 2023, that was that B wave trap I talked about. We had that massive alt run from June until March where everyone was calling alt season, etc., etc. If you're wondering why it's been a trader's market and altcoins just pump for a couple of months, because the pumps are just counter trend rallies. Because before, what you had been in was a bull market. So the bear markets were the counter trends and the bull was the primary trend. This time, however, since November 2021, we've been in a bear market, and every rally, even that one there, see that's the Trump trade, has just been a counter trend rally. So if you're confused as to why the rallies are short and it's a trader's market right now, because you've been in a bear market for the last 3 years. Crypto has not been in a bull market since that top. These are the phases: that accumulation phase, public participation phase, excess phase. Okay, and you can see it within the market. No one knew about crypto back before 2014, only the people in the know. The public participation phase, where the public get involved. Where did all of you hear about crypto for the first time? 2017, which was right here, the excess phase of the public participation phase. No one knew about it at the beginning of the public, some in the middle, but everyone knew about it by the top of that public participation phase. Then you had the excess phase, which is where everyone was talking about it. Elon Musk is on Saturday Night Live. Like, you had that major excess phase where, we had COVID shut down. People were gambling on it. You had, meme coins going crazy up here. All right. So that was the excess phase. So all you're actually doing is just correcting the whole halving cycle. Okay. So all we do is we get our fib and we bring it down, and may have bottomed here. It may come lower down to this kind of area. It depends if it goes off the log or off the regular, but you can see, we are definitely correcting that whole cycle, and you can see we're in a bear market. So we will not get alt season until this turns around and changes market structure again. This has to be bullish market structure for you to get your alt season, one of the key ones. All right, so very, very clear. That was the B wave, so as you can see, where are we? We're getting towards the end of this C wave. This is where you're supposed to capitulate, where you're supposed to realize something's up and you give up. It's that final wave. So here's me in 2024, when no one even thought about the halving cycle being broken, talking about, as I said in early 2022, the halving cycle is broken. We're correcting existence. Everyone thought it was all the same. It's not. Global liquidity is different. You're correcting the whole move. February this year, people will soon learn that it's not just price that capitulates people, it's also time. Halving cycle broken. All right. Price would not capitulate people because they just see it as a bargain. They need to know that something's different, which is now the halving cycle broken, before people would capitulate. You're seeing it now. Okay. They're realizing, but as you can see, we're also towards the end of that capitulation zone as well. Another chart to look at as well is your others against gold. You know, it's actually funny that crypto was invented because they don't trust the fiat system, yet they measure it in the fiat system. So again, if you look here, you can see the exact same thing again. Wave 1, accumulation, pullback, public participation, pullback, 1, 2, 3, 4, 5, excess. And again, come down. You've got from here, January 2023 going up, 23 B wave trap, which you'll also notice came perfectly up to zag zone. Let me get it on the log. I'm sorry, on log. Zag zone. Okay, and now you can see same thing, we're bearish market structure. Okay, so this was the B wave trap. All right, you're now getting into the public participation of that C wave. So people are starting to realize that, oh, this alt cycle is different. We're going to come down and we're going to get that capitulation. Okay, but you're in the final leg. This is the normal bear market. This is the B wave trap. Same thing again. Again, I'll show it to you on others dominance as well. That B wave trap there came perfectly to a normal zag zone, Fib 500. It's just a perfect B wave trap. So can you see how alt season's not coming while this is in a bear market? Every rally we've had is just a counter trend rally, counter trend rally, counter trend rally, counter trend rally. Even that was a counter trend rally, but it was a larger B wave one, which is why it lasts so. Counter trend rally, counter trend rally. Okay, this needs to change market structure before we go into alt season. So people are really confused in calling this cycle the worst ever. It's because it was a trap. Okay, I've just shown you an abundance of evidence around that, showing it's because it's correcting the whole cycle. I'll show you why that's actually a bad thing, but also a very good thing, big picture. Okay, so crypto's bearish now. However, it's extremely bullish long-term, and I'm going to talk to you around that now. All right, this is our Australian market here. See how you have your first wave up, your pullback, your bear market, that's your accumulation phase. Your next one, public participation, your pullback, that's the tech bubble. Oh, sorry, that's not tech bubble, that's the 86 pullback there. And then you got your excess phase. After you get your 3 moves, what do you get? 2 steps back. And you'll see it came down perfectly to the 618. So your zag zone. That's a bull market that's correcting the whole bull market. The exciting thing is that then becomes all the accumulation phase of a larger cycle. So see now when we go like this, you can see that whole cycle becomes the accumulation, then the public, and then the excess. That's the GFC crash. So the GFC was so brutal because what it actually was it was correcting a 25-year bull market. Where we are right now in crypto is here. We've only had that first phase, which is all the accumulation phase of a larger cycle. So it seems brutal right now because all you have come in during the excess phase of that wave. And we are correcting the existence from the last decade. Okay, so that's why it seems brutal. Because, however, what's coming, and you know this is true because of where we are with blockchain, public participation, mass adoption. So over the coming decades, you've got the public and the excess to come for. So yes, it's brutal right now because you're all getting wiped out because you came in at the wrong time. Anyone that bought crypto back in the day is still laughing it up millions and billions of dollars. But you all came in during that excess phase, which is why you're getting wiped out. If you put in the work now, you're going to be able to get this bottom and then get that next way. Might be it could be months, it could be years, we don't know. But if you put in that work now, this is what's coming afterwards on the larger scale. Okay, so yes, there is short-term pain, but there is long-term massive gain. And there's a little old saying is that you put in the hard yards when the times are tough so that you can reap the rewards later on. You don't come in during the peak of the bull market and then expect to get rich. You put in the hard yards now when it's not pretty, when it's not sexy, when it's in this kind of phase. So then you can actually get this period and then you get to reap the rewards last time. That's what I did with Bitcoin back in 2018. I got nailed, smashed on the 2017 peak down to 2018, put in all the hard yards for that 2018. I was able to get Bitcoin down at 3K. So then I was loving life when it came up. Okay, but that's what you need to do now is put in the work now, knowing that you're correcting that first cycle, and on the larger cycle, it's only just beginning. What you've also got to remember is there's different types of corrections as well. All right, and the risk on part will often have a different correction to the safer part. And I'll show you an example again with the S&P 500 and S&P 500 down the bottom and Russell 2000. Okay, so here you can see the Russell 2000 peaked in September 2018, and then it went at A, B, C and corrected. You can see it never took out that high again. Whereas here, we actually peaked there. We went down 1, 2, 3, up 1, 2, 3, and C. This is called a zigzag correction. This is called an expanded flat correction. And that's often something you get is that divergence in your risk on, because money comes out of the low liquidity risk on stuff first. People don't realize it's happening because they just see the index going up and go, oh, nothing to worry about. But it takes longer to get out of the low liquidity stuff. They hide in the big stuff. And then when they're ready, boom, the crash happens. Okay, so you can get these normal corrections like this where zigzag, higher one, that's called an expanded flat. I'll just show you what that is. So see here, it's like it goes 1, 2, 3, 1, 2, 3, takes out that high. People think it's a bull market and then crashes really fast and rapid below that one. Okay, and the key thing is that C wave is impulsive. It's really fast and rapid. I'll show you throughout history where it's one of the biggest traps they do because it clears out liquidity, gets everyone on the wrong side long, then short, and then boom, it takes off. Okay, so let me show you here. Take out the high, take out the low, and then boom, raging bull market. See, expanded flat. And then before the next bull market, same thing here. So from there, take out the high, take out the low, and then boom, we get the next bull market. See, expanded flat. They clear liquidity before going up. And then the next one. This is the tech bubble GFC. So everyone thought the GFC was a new bull market. It was actually B-wave top. Took out the low, really fast and rapid. See how fast and rapid it is? And then boom, next bull market again. And then here it is again. Take out the high, take out the low, then boom. So see here, it's called the liquidity shakeout. Bitcoin, you've seen, does it all the time. Look back on Bitcoin, you can see it did it from the 20K drop there. Actually, I'll show you. See here, take out the high, take out the low. Expanded flat, then boom, take off. Here, take out the high, take out the low, boom. So it's a very, very common move to do before it starts to take off. Ethereum as well. Did it before its major move that we had recently as well. Here as well, see? Take out the high, take out the low, boom. So it's a very common kind of thing they do to kind of clear out the system before moving higher. So I talked about this back in August 31 this year, talking about the biggest mistake people make is thinking a new high is a bull market. As I just showed you, often it's actually a B-wave fake out. Okay, and the S&P 500, Dow Jones, they've done it historically as these fake outs. What I was talking about here was back at that point is that there were times here. Bitcoin now is doing that same thing, come up. We're in the B-wave pocket. You can see this is the GFC, B-wave pocket, took out up to the B-wave, then went down. This is the COVID drop, B-wave pocket before going out. And this was back in that 1974 crash, same thing, B-wave pocket before the crash. So see the three-wave move, 1, 2, 3, crash. 1, 2, 3, crash. 1, 2, 3, crash. Okay, this here possibly could be 1, 2, AB, and this is an ending diagonal, which is all a C wave as well, up into the B wave pocket. That's, I guess, something you've got to be really careful of is there going to be, was this a B wave trap and we're going to get this C wave drop, which also could be an a running flat, which comes down to here as well. So the running flats can come to here. It's the same thing with the expander where it comes up with the B wave pocket, but instead of taking out the high, it just comes to the middle range. So this is it here. So 1, 2, 3, 1, 2, 3, fake out, and then it goes 1, 2, 3, 4, 5. But see how it doesn't take out the low? It just comes back down to this kind of zag zone area here and grabs the liquidity often from below that move there. Okay, so I was talking about that. And then here I was talking about the gold to Bitcoin chart, how it's been down and actually this accumulation. And this is another chart showing that Bitcoin hasn't been in a bull market. Bitcoin has not been in a bull market against gold, because remember, you shouldn't put it against fiat. You should put it against gold to show, as I showed you with the others. We haven't taken out the November 2020 top. We had a little fake out, which is common, bouncing off here. And that move now has actually come up and changed market structure there, which I'll show you. Okay. Support, 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 fake out, support, and now you've changed bullish market structure after bullish divergence. That's moved into convergence. Okay, so that's not a bull market. And if you look at it from how you should, like this, same thing, Bitcoin against gold, you've had your bull market, now you've moved into a sideways market. Bitcoin is in a correction phase still. It's showing you that. That's a sideways market. It's not a bull market. So again, this here at the moment is just a B wave top. It'll come back down to the zag zone here. Minimum, maybe it even comes back down to here against gold as well, which might align something with that running flat. But can you see Bitcoin's not in a bull market? It's not in a bull market when it's not bullish against gold. Look at this. Every cycle outperforms gold, outperforms gold, outperforms gold. Why is it not outperforming gold? It's in a sideways market, which is normal. It's healthy. You're not supposed to move that fast, that quick. That's one cycle done. We're just correcting the cycle, which you've already seen in altcoins. Bitcoin's the same. The thing that changed with Bitcoin is two things. One, MicroStrategy's been buying up a lot, and the ETF. The ETF changed the trajectory of what Bitcoin was doing from here. If you look at where Bitcoin started to go bullish, it was when they announced the ETF, which brought in new supply, demand, new inflows. So if you look back on Google, etc., you'll notice that this was the period here where the Bitcoin was all being talked about and it's going to get filed, etc., etc. So from that point there, once they knew the ETF was coming, they knew halving cycle, people are going to be buying in. Really easy to kind of do the narrative to build it up, etc. Going back to what I was talking about with the bigger picture, and I talked about this on one of my articles as well, whatever was the best performing asset of one decade is never the best performing asset of the next decade. Okay, so back on May 5th, I talked about this. The best performing asset of the last decade, Bitcoin. 100%, cannot argue with that. However, what you've got to remember is decade by decade, winners don't stay winners. In 1960, the best performing asset were US stocks. They crashed in 1970. In 1970s, the best performing asset was gold. It crashed in 1980. In 1980s, the best performing asset was Japan. It crashed in 1990. The best performing asset in 1990s was the tech boom. It crashed in 2000. The best performing assets of 2000 was emerging markets and commodities. It crashed in 2010. The best performing asset of 2010, Bitcoin and big tech. Does that mean it's going to crash? Correct. Okay. So a healthy correction is normal because you're actually, if you've been the best performing asset of one decade, it then, as we know, markets zig and they zag. It needs to correct that move. So that's why it's actually not a good thing. Don't chase yesterday's winners. Okay. Why? The macro environment changes. You know, during that period, we had low interest rate environment. Money was cheap, money flow, global liquidity. That's changed. And you know, it's changed. You know, interest rates are high now. You know, there's less money in the system. So why do you think it's going to be the exact same as last 10 years when the total macro environment has completely changed? Okay, you can see when energy's been in a bear market, the Nasdaq's been in a bull market. Energy's not bad. It's just that the macro environment has been conducive to it being in a bull market. However, when this goes into a bear market, it goes into a bull market. Okay, so you've just got to know what things talk to each other, what is bullish during what environments on the big picture, and you'll start to realize how things are actually playing out. All right, anyway, let's get back to here. So that pushed up, like I was talking about. The other major thing I was talking about was the divergence. Okay, the divergence in Bitcoin to MicroStrategy. MicroStrategy is leveraged Bitcoin. Okay, and what you'll notice is down the bottom, when Bitcoin made a new low, MicroStrategy made a double bottom. MicroStrategy is up about 3,700% from the Bitcoin's only up 500%. So it's definitely leveraged Bitcoin. This recent high we've had has actually happened on bearish divergence. So we haven't had divergence since the bottom. So let me again show you the importance of that. Okay, so can you see that recent high we've had on Bitcoin was not confirmed by why? If it's leveraged Bitcoin and it's been outperforming the whole time, why is something that's leveraged Bitcoin, which means when Bitcoin goes up, it goes up more? Why is it showing divergence here right now? Okay, and now it's actually changed market structure. Okay, while this one here, same thing, has now, that resistance or support, why did it come up above and now it's come back below? You know, massive, massive red flag there. And if you actually look at it, and I'll show you it from an easier perspective as well, it's called relative strength. So if you bring up your RSC, relative strength, get rid of my OBV and RSI for now, what you can do is compare an asset against another one. And what I'm going to do here is bring up Bitcoin. And, oh, sorry, I'm in Bitcoin, so that won't work. I need to bring up MicroStrategy. MSTR. And what you'll notice is this. So it's been in a raging bull market. And can you see how from this period here, from that low, when it started to show relative strength. So can you see how it's been in relative strength against Bitcoin that whole period? And again, from that peak we were at, this double top that we had, or lower high, less relative strength. And can you see how for the first time since the bull market, MicroStrategy has been showing weakness, relative weakness against Bitcoin? Why? Okay, so that's the trend over. You've got that. You've got bearish divergence on that along the way as well. Okay, so from there, bearish divergence from the 3rd to the 5th. So all you've had is you've had a complete cycle wave. So bare minimum, again, you're getting a zag retracement on this one as well. All right, so this should get down to about 130 to maybe $54. We don't know where, but somewhere from here to here, MicroStrategy will come down to. That's again a normal healthy correction. Maybe it comes back to the Fib 5, back to this resistance level here, back at $85. Okay, but again, you are correcting the move. Typical, this is any normal stock. You've had a wave up, bearish divergence off the top, change market structure. You know that you get a zag retracement. What makes this any different? You can see the relative weakness. So I talked about this back in February. So here I was showing blow off tops. If you guys have been following me for a while, you know I've called some major blow off tops like Brain Chip, Lake, CXO, etc. And can you see how you gap up, exhaustion gap into Doji there? See, this is a typical blow off top. This is the 4th chart. See, it's the exact same. Blow off top, the exhaustion gap into the Doji, into the bearish candlestick over it. See, blow off top. Talking about that, and again, I called all of these. That chart I was showing there was MicroStrategy. So MicroStrategy had its blow off top there. Everyone was looking for the blow off top on Bitcoin, but it actually came on MicroStrategy back there. Perfect blow off top that you can see. This is weekly. It's going to daily. That happened right there. Okay, the gap up there, that's the blow off top. Never came back there again. Perfect top. All right, so everyone was looking for that on Bitcoin. They didn't realize that. Remember, MicroStrategy is the one lifting up Bitcoin right now. There's your blow off top. They were looking at the wrong thing. Something you keep hearing this cycle is it can't be a top. We haven't had euphoric top. Yeah, we did. We had an exact euphoric top. And where was it? So again, if we go back to our others dominance chart, at the very peak of that B wave, right there. What's that date? March 2024. The very peak of that B wave when everyone was euphoric. The Bitcoin ETF just launched. Let's have a look at our fear and greed index right there. Euphoria, March 2024. There's your euphoria right at the top of the big wave trap. Then on top of that, we then had another euphoria on the Trump trade right there. We were above, that's euphoria there. 24th of November as well. The president launched his own meme coin. Everyone was programmed into the halving cycle. What you weren't aware of is that it was so short and you weren't expecting that. That's what caught people off guard. They're used to this euphoria that lasts for, months and months and months and months. But because we are in a bear market and it was just a corrective move, it was the trap. So yes, we did have euphoria. You just weren't aware where we were in the cycle and that it was a big wave trap. Okay, we came above and you've come that way. We had it twice. You could not say that we were not in euphoria in March last year. We were, because when I called that top, I was met with the exact opposite. And when I called that top there on the Trump trade, the exact same thing as well. Okay, so we definitely had euphoria during those periods there. Okay, let's unpack last cycle because it will help you understand this cycle as well. So if you look last cycle from that wave, can you see how we've come down? We've bounced perfectly off the fib 382. Okay, so I'm just going to put up there 38% discount. Bulls are willing to step in and buy it. So they're not letting it go any lower. That's normal zag zone retracement, everything healthy. Now we get rid of that one, buyers step in, we go to the next wave. And then this time, we come in at the fib 5. Okay, they're not willing to step in it. Now they're waiting for 50%. Okay, so not as good. They stepped in there last time, but we're still buying off the zag zone. Everything's still all right. We go again. The next time, we bounce off the 618. So again, not 50 this time. They're making a big, so waiting for that 62% discount now. And then the next time, you can see they didn't step up. They should have bought here and they didn't. So then when they're not buying off the zag zone, they're not buying off a discount, the top's in. You'll also notice that where they should have been buying ended up being where they were selling. Okay, and again, what you'll notice, let me just get rid of that and bring up OBB, is that you had your divergences going into that. Okay, so this is what's called an ending diagonal or rising wedge, getting those momentum divergence, lower in volume on that. And then you can see we've sold off on vote. We haven't had volume off that move. So that's a fake out to come up B wave trap. Everyone thought the trend was it, just like I've shown you the bigger thing, and then it rolls over. Okay, so A, B, C after correcting the move up. All right, so typically where the buyers should come in is where the sellers will then step up. See how we had that move up and then we've had this ending diagonal on divergence? Let me show you how this exact same thing is happening on Bitcoin right now, but on the weekly. So weekly. Okay. So from here, again, first move up. See how we're stepping at the 382? Strong trend, just like last time. That's fine. 38% discount, buyers stepping in. Strong trend. What do we get? Boom, nice bounce. Then what do we get? We get a 50% discount, just like last time. Ooh, the buyers are coming in. Everything's all good. But the last time they were 38. Why are they coming at fib 5 now? 50% off. Then next time, not 50, closer to the 60. They're coming in at about a 58, 60% dip now, getting weaker again. And then now, what you'll notice is that they haven't stepped in where they should have. Every other time, zag zone, zag zone, zag zone, not there now this time. Why? Should be a bargain. Should be an absolute bargain right now, and it's not. Okay, so from there, what you then got to look at is just like we had on the other one was, see, you're getting your bearish divergence. Okay, so exact same thing from here, from there to there to there, you'll also notice is, you'll be able to see it better on the log, is it's that ending diagonal. Exact same thing. Okay, so you've come up, exact same ending diagonal, but instead of on the daily, it's on the weekly on your bearish divergence as well, and we're not buying up those ag zone. So again, what that means is that we are correcting the whole move. Okay, we're not correcting just one wave like we have. That's one wave correction, one wave correction. This is correcting the whole move, which means that we could be coming down to this area. Okay, anywhere from 57 to 35, or if it's not on the log, it might even come down somewhere in this kind of area here, 58 to 84 as well. So they're kind of the areas that you'd be looking at for that part. Okay. As you guys know, I've been bearish on it. I wrote about this 27th of October, which was a month ago. Classic warning signs, Bitcoin record about to end. And talking about a lot of these things. They've been talking about showing the cycle. Talking about MicroStrategy that I've just done. See the bearish divergence, breaking out of channels, etc. And here's something no one's talking about gold. Okay, so now you can see with that, and we've actually changed MicroStrategy bearish. All right, so Bitcoin is not in a bull market. That at that pivotal moment, we must defend 93. We're not defending it because that's zags and that we've always defended. So we should be getting a major correction. I believe that we're close to getting at least a bounce. I'll be very surprised if we don't get a bounce in this area. But all bounces should be sold into, something like that. All bounces should be sold into right now because as I've shown you, the trend is down. On a weekly basis, I go through, I'll show you what charts I go through, which is help keep us on the right side of the market for a long time. Not that one, I want this one. Okay, so we look at Bitcoin, the Ethereum USD. If you look at Ethereum Bitcoin, again, that area that it's come up to is just a zag zone. Okay, if you bring up it's come up to a zag zone right now. Okay, so again, it's just a three-wave move at the moment. It needs to get up through that area there, which is this major support before Ethereum's in any kind of longer-term bull market. At the moment, you can clearly see it's actually still a downtrend. All right, so if it gets up through there, yep, then things are looking pretty. Getting through decline, up through zag zone, things are looking pretty there. But that's bearish. Others, bearish. Okay, as you guys know, I got out of the crypto there, luckily dodged that. But yeah, at the moment, this is bear flag coming down for at least that further move down. Others, dominance I've already talked to you about here. So unless that changes, we can't go alt season. It needs to, but what we don't know is how much further on the way. But as you can see, this was the trap. We're getting towards the lower end of the cycle. So this is where you should be putting in the work. Let it come down, because once it comes down here, that all becomes something correcting up the whole cycle, and then we start to get into excitement. It's very normal for a whole excess phase to get wiped out, which is why that could have been the low, because it did come down and do it, but it might still come down a bit more like that, etc. But that's the kind of thing you're looking for, is wiping out that whole excess phase. Bitcoin dominance, until that breaks below that red line, we can't have any form of alt Cs or anything like that. So at the moment, there's nothing on that one. USDT, this is the other one to be wary of. You can see it's come down, and now we are starting to change back through zag zones. I'll show you on the daily. See, it's just strong bullish momentum at the moment, just nothing. You can see that's what I was saying, is we're going up there. So yeah, this is an uptrend. Crypto is not bullish while this is in an uptrend. USDCD, same thing. See this liquidity bottom, buying, fake out, buying, boom, going up. So same thing as well. I've already shown you that one. And then the other key one is Bitcoin against S&P 500. So exact same thing, ending diagonal, broken below. So that was a key sign there to get out of Bitcoin as well, unless we were to reclaim it like that, which we never did. So a lot of charts showing the exact same thing. So back in May, well, it was actually March, but there I was talking about, so I loaded up in March. You guys keep buying your Bitcoin. I actually wanted silver because remember, it's all about opportunity costs as well, in the fact that you want to be in something that's outperforming something else. Okay, so silver against Bitcoin had actually done that fake out and changed back from there. So if you actually look at silver against Bitcoin, you can actually see that from that period there, where is it here? You know, it's been up, it's up 64%. You know, that's massive. If you had bought silver during that period instead of Bitcoin, you've outperformed Bitcoin by 64%. And that's what you've got to think about. It's not about Bitcoin's up. It's about, was that where my money was best during that period? And that's what you've always got to think about, risk to reward and outperformance. Because if you think about it, if you look at why, you know, you guys think it's just data. I absolutely love crypto and love Bitcoin, but this is the beauty of following data and not following emotions. You know, I exited all of my crypto at November and my Bitcoin, and I've never bought back in. And people said, why? Well, one, at the top of the cycle, at the bottom of the cycle, I had like 70% Bitcoin, 30% altcoins. By that top of the cycle, I had probably 80% alts and 20% Bitcoin. So yes, I sold at 64K, which was here, wherever it was, 64. And I've missed out on 37% over the last 4 years. That's about 8% compounded. Is 8% compounded something that I care about missing out on? No, because what I did was rotate a lot of that money into gold, gold miners, silver, etc., that have far outperformed. Because again, the best trade of one decade is not the best of the next one. I'm going to be rotating so much money into crypto in the coming years. You wait. I can't wait to show you how bullish I'm going to be because we've corrected the cycle and I'm going to ride that next decade long one that's going to come. I just need to wait for that correction to unravel. All right. So yes, I missed out on a 37% move, but again, that happened over 4 years. But what I did skip was I sold Matic at $3. I sold Cardano at $3. I sold GRT at $3, Audio at $3. They're all down 99% from that period. Okay. And that's the thing. Even though I missed out on that on Bitcoin, I dodged. And because remember, most of the money was in altcoins at that time, I dodged that thing. There's not one person listening to this video that can't honestly say they wish they got rid of out of all of their altcoins back in November 2021. The other thing you got to remember is what was making it that B-wave trap, which I talked about during the time as well, is it was the meme coin cycle. When meme coins were the best performing asset of that cycle, you know something's up. You know it's a manipulated move. All right, so it was so, and again, I mentioned that at the time. When meme coins are running the cycle, it's manipulated. It's a fake out. It was so obvious when you think about it, but it's at the time, it's really hard to see the data. It doesn't mean Bitcoin's bad. No, the fundamentals of Bitcoin are amazing. It's just, you got to remember everything runs in cycles, just like the fundamentals of Microsoft were amazing during the tech bubble. It didn't stop. That was the number one stock in the world. Didn't stop it going into a 9-year bear market. Here, it was $60, had 23 billion revenue with a profit of 10. Here, the fundamentals got better. It's got now revenue of 60 billion, 4 times more, and profit of 15 billion, 50% more, yet it's 75% off. Did the fundamentals change on Microsoft? No. What changed? The macroeconomics changed. Here it was cheap money. Here we were in an inflation environment. This is where commodities and energy performed. So fundamentals tell the long-term picture. Macro cycles determine the waves within that cycle. So it's really important to know something can be good fundamentally, but where you are in the macro environment can still make it sell off. And Microsoft, a perfect example. It is still a powerhouse today. It's still a top 5 stock. It was the number 1 stock in the world during that time, but the macro environment still didn't stop it dropping 75%. Okay, so it's really important to not only understand fundamentals, not only understand technicals, but also macro. You've got to combine all three of them together to help understand where we are in the environment. So if you've been caught off by this cycle, it's because you don't understand how markets work. Okay, they move 3 steps forward, 2 steps back. That's all it's doing. But what's really exciting in crypto on the big picture is that we're just correcting the accumulation phase of the larger cycle. What's coming next is going to absolutely tear your socks off. If you think it was bullish this time, you wait and see what comes out. Where you are now is this period here on the tech bubble. Okay, it's the .com pop. You had the blockchain pop back in November 2021. You're correcting that. We're going to get rid of all the shit coins that don't deserve to be there. And then only the best will survive and get through. And they're the ones that will make you lots of money during that next cycle. So put in the work now. Find out which ones look good. Find out which ones have strong fundamentals. And then from that, you can then keep an eye on it. Also, if you know how to read charts even better, you can see when the charts pull up and change out of that to know, okay, these are the ones that are surviving. These are the ones that will make it through that next cycle, because they're the ones where you go into the public participation on the larger scale, not just a 4-year bull run. It'll be a multi-decade run with pullbacks along the way. So some things to think about. The NASDAQ, we know it has correlation with the NASDAQ. We know when the NASDAQ drops, it drops twice as much. The NASDAQ hasn't even dropped yet. So if you think Bitcoin can't absolutely crash from here, it's already crashing now on that. What happens if this comes down to a major level? Which again, if we look at the cycle, look at where we are. Accumulation phase, pullback. Public participation phase, pullback, excess phase. We're going to be correcting the whole cycle at some point, I believe in 2026. Okay. What do you think it's going to do during that period? It won't go over that period, but what do you think it's going to do over that period there? Data says it's going to crash more. Will it disconnect? Maybe. But you need the data to tell you that, because at the moment the data tells you it has not 85% correlation with NASDAQ. And if the NASDAQ's in the excess phase and the macro environment's changing, and as we know, the best point asset of one is never the next, they're the kind of things you've got to take into consideration. So do I love Bitcoin? Yes. Do I love crypto? Yes. Am I excited for its future? Oh, yes. Does that mean I want to be exposed to it now? And why I haven't been exposed to it this century? Because it's not where the opportunity is right now. It is where the opportunity will be in the future by far. But my opinion from my data, my research, and again, this is just some of it, opportunity cost. Okay, there's better risk to rewards out there right now. Doesn't mean the fundamentals aren't good. They are. Doesn't mean it won't be absolutely bullish on the larger scale, just like the .com was. Yes, it definitely was. Blockchain is the future, just like the internet was the future. But before it took off, it had to capitulate people first. There were too many people loaded up trying to get rich quick. It also happens around this part of the cycle because people are stretched and people, are desperate. They're already hurting. So they're, man, I need this to save me. They put it in, they gamble. They go off past cycles because that's what's always happened, and then they end up getting wrecked. All right, it'll flush out. And then when it actually does bottom, people won't have any money to be able to buy the bottom because they've already bought the top and they're missing out. All right, so hope the video helps, guys. I'd also like to, was there anybody else out there that identified that B-wave trap and the cycle being different prior to it even happening? I know a lot of people talked about it when it started happening, when it was obvious when we're in it, the cycle's different, it's trapped, it's a halving cycle's broken. But was there anybody else in the space that actually saw it before, and recognized? I'd really love to know, because I really want to try and triangulate my data with some other great analysis as well, just to see if other people have something similar or if there's something I've missed as well. Also, guys, if you've got a total counter argument to this as well, please share that, because again, I just follow data. Okay, I don't have any emotional attachments to any asset classes. When that asset looks bullish, I like it. When it looks bearish, I don't like it. And that's all I do. Okay, and I always like to try and be on the fence with it. I know you guys think I've been very bearish on crypto, but it's just because where I knew we were in the cycle, and I was trying to yell that from the rooftops because I know people got wrecked and I know people were going to get wrecked. And I've had conversations with a lot of people that have lost, up to millions of dollars thinking that this was a sure bet. There is no such thing as a sure bet. I even saw a video before saying, oh, this is what always happens. Always is the most dangerous most dangerous word you can ever have in financial markets. Always does not exist. And often when you hear those words always, it's because you're conditioned to believe up only, and actually the opposite happens then. All right. So we're in kind of extreme fear right now. I think we will get a bounce soon. But like I talked about on the larger scale, it's still bearish. And until those larger timeframes turn around, which I'm not expecting them to anytime soon, there's more downside to come, unfortunately. But if you put in that work now, and then hopefully things can get exciting from here. All right. There is one potential bullish option, which Bitcoin could get up to that 145K. But it's on the low probability side. But again, I like to follow data. If we do turn around, I do know that's a possibility that we could get that last move up to 145 to really trap all these last people as well. I don't see Bitcoin ever getting above 150 this cycle. I definitely can on the larger scale, but just on this kind of correction right now, either the top is in or 145 is the top. So just be careful with people calling out $1 million, stuff like that. Maybe one day in decades to come, but not in the next year. All right, guys. Hope you liked the video. Please take care out there and just educate yourself, please, so that you don't ever have to be watching these kind of videos to know what's going on. You should be able to learn these things yourself and understand how markets move, etc. If you are interested, you like this video, check us out, masterofthemarkets.com, www.masterofthemarkets.com, or follow my socials down below. All right, take care, everyone.